What's up, guys? Today I'm going to do a little tax training for you and kind of show you my process on why I invest in real estate, some of the benefits it can have, and how you can use real estate to your advantage. This particular case is actually a rental property. Gets even better if you do this with your personal residence. But basically, this is how the wealthy keep and grow their wealth. They know the tax laws. That's why I went to school to be an accountant, to learn more about taxes so I could take advantage of things like this. So we're looking at this here right from the IRS website. Basically, this is explaining capital gain tax rates. Short-term capital gain tax rates, you're going to pay actually your income tax rates. So whatever bracket you fall in, that's going to be the rate you're taxed at. But if you have a long-term capital gain, it's actually going to be taxed more favorably. So if your income in 2020 is between $0 and $80,000, you're actually taxed at 0%. Now that's a good chunk of savings if you're holding assets and selling them. I'll show you our specific case here shortly. But you can see if you fall in this next bracket, 80 to 496,000, you're going to be taxed at 15%. Now, I will say this is for married filing jointly. So if you're single, the threshold's a lot lower. But you can still get preferable tax rates for long-term capital gains. 15% is a lot lower than most people's regular income tax brackets. And 0% is a heck of a lot lower. So this is what we just finished doing. We sold a property today on Friday the 13th. Wasn't too scary, actually. So we got $28,000 at closing. This was a rental property for a few years. So the whole time we owned it, we were getting cash flow. I'll break down some of the numbers. Basically, we bought the house for $83,700. We ended up selling it a couple years later for $104,500. Now, throughout the time we owned it, we paid a mortgage of around $650 a month, and we usually rented it for $1,095 a month. So when you consider cash flow for 2 years, plus the proceeds from the sale, and most of it was actually tax-free due to depreciation while we owned it, and long-term capital gains rates when we sell it, our AGI could fall between the 0 and 15%, but I'm hoping it's going to be 0. So this is just one example of how knowing taxes, understanding how to use them to your advantage can be helpful. And also, I touched on how a personal residence can be even more beneficial. So if you don't want to be a landlord, that's understandable. But you should know about real estate. You should learn your market. And you should treat your house like an investment, because that's what it is. It's one of the biggest buying decisions you're going to make in your entire life. You should treat your vehicle with the same due diligence, but do your research up front. Find out what your property is worth. Try to get an undervalued property in a good neighborhood. Because after 2 years, if you buy it right, put a little sweat equity into it, and sell it, the IRS actually allows you to sell it tax-free. So there are some caveats. It has to be less than $250,000. So for most people, that's not going to be a problem. And you have to have lived there 2 out of the last 5 years. And there's a couple other little details, but nothing too crazy. So for the average person, this is a good way to invest where you live. It's kind of called like a live and flip strategy. So you could do this every 2 years and just really scale up slowly with real estate and build that money tax-free just in your spare time. So hopefully that's helpful. Let me know if you have any questions. Be glad to jump on a call or reply to a comment below. Appreciate you guys, and I'll see you on the next training. Happy Friday the 13th.